I have more edge than like 99% of Wall Street analysts will ever have on this asset. In the next 10 years, Bitcoin's worth more than all the money in the whole world forever. It's like quadrillions and quadrillions of dollars in 10 years. We are moving way quicker than I ever anticipated at this size. Yes, we get periods of outflows, followed by monumental periods of inflows. We are talking about tens of billions of dollars a day. This whole concept of price suppression. Now, there's a whole lot of angles I can go down here, but the first one is
Mr. James Checkmate, Check on Chain. Thank you so much for joining me here today.
Thanks, mate. No, it's good. It's always good sharing insights and just trying to work our way through this very strange world that is Bitcoin and everything around it.
So well said. So for those who don't know, James, I mean, he's one of the few analysts that's, called, some of these major shifts we've been seeing in Bitcoin over the last few cycles in the last number of years, and leading the Glassnode team, just over the last handful of years, and just has a lot of experience analyzing Bitcoin and the time chain, the blockchain, but the time chain that the whole protocol is wrapped around and why this is so important. So we're going to tap into this today, get James's thoughts on where we're headed, where we're at right now and where we're headed in the future, but also the importance and some of the civilization shifting features and incentives that Bitcoin gives us as humans for the first time ever. So let's kind of start, right with some of the topical things. I want to get your thoughts and have you unpack a little bit of ETFs. I just talked to Matt Hogan recently of Bitwise. I would love for you to unpack a little bit of just the ETF world and what you're seeing. Is it the slowdowns, the inflows, the outflows, and then it picks back up? I would love for you to unpack some of that just for the average person, because there are a lot of people obviously that are, self-custody is the innovation, but there's a lot of people in, whether it's superannuations or 401ks or here in America or whatever it is, wherever they are in the world, that they have a lot of money tied up and they're trying to put it somewhere. So I would love for you to touch on this and just see, what's happening when you're looking and analyzing everything right now in that world.
Yeah, I mean, the ETFs are incredible. I was in Seoul recently for the conference Bitcoin Seoul over there in Korea, and the theme that they wanted me to talk to the industry, because we did an industry and a public day, and what I was talking to the industry day was all about how the market cycle is changing, but more importantly, the institutional shift. And these ETFs, I had several slides on there just showing the scale of them. Like, they're enormous. They are the most successful ETFs that have ever gone live. I truly can't envision what could possibly happen in the technology in the world moving forward to have an asset that's going to get more inflows to these things. So if you take IBIT and FBTC, the two big ones, I'm going to get my numbers wrong, but I think they've surpassed something like 70 or $80 billion or something in total. Nevertheless, when I checked them last, if you put those two together, their total, just the inflows, not the AUM, because obviously when you buy an asset and then it goes up in value, your AUM can be much larger because there's a return on investment. But the dollars that have gone into those two is like the 350th biggest company in the world. That's where we're at. Just the fresh new dollars going into these things. That's the big two. In total, they're like 50 billion or 45 billion in total inflows, and that accounts for GBTC, which saw an enormous amount of outflows in the early days. So, like, from every single metric, it's astounding to see how big these things are. Now, I had another chart which looked at inflows and outflows on like a weekly basis. And this is another one to just help put things in perspective. On average, when we have an outflow week, it's about $160 million worth of outflows, right? A big number, 160 million. But the average inflow week is 775 million, right? 4.8 times larger than the outflows. And we've seen this over and over again. Lots of TradFi analysts have been saying, look, these ETFs are just, people who want to get an orange poker chip and they just want to, play in the levered casino and play the levered NASDAQ bet. And the assumption was that the moment we get a correction, things start to go a bit hairy, which they do. The moment it goes hairy, they're going to just sell everything. Be like, that's it, I'm out, I'm done. What we've actually seen is, yes, we get periods of outflows followed by monumental periods of inflows, right? There's a $250 million outflow. Bang, 2 billion. Bang, 1.5 billion inflows that follow. So there's this there's some selling on dips. Makes sense, happens all the time. Dips are literally from people selling. So during the process of a dip, there are sellers, And then what follows is a whole lot more, 5 times more buy side pressure. So we are still in that phase. I don't really know how you set your expectations for this before it goes live. All I know is that whatever I did have been blown out of the water and continues to be. So really, I just look at the ETF metrics that I have on my site, and I just kind of, it's kicking ass. That's the best way I can describe it. It is just kicking ass. And you're right, there's these trap pools of capital, things like, retirement accounts. I mean, I've got some of my retirement account in the ETFs, not because I'm full on board with self-custody, but for me as a business owner, I've got too many other plates spinning. We've got you mentioned superannuation. We've got self-managed superannuation. You're the director of a company and all that kind of stuff. I could do self-manage. I could do spot and hold it in my own wallet, and maybe one day I will. I got so many other plates spinning that for me, just buying the ETFs was by far and away the easiest way to just solve my accounting problem. Keeps it really, really simple. The service I use makes it it's clean, it's cheap. So for me, that's actually where my retirement assets can go. And it does. It simplifies things dramatically for certain vehicles. So I think, and that's, if I was to give one big theme of this cycle that is different, it is opening up new pools of capital, whether it's the ETFs, just giving it a TradFi wrapper, whether it is these treasury companies, which is like tapping into bond markets. Basically, there's all these pools of capital that haven't yet been able to get access to Bitcoin or Bitcoin exposure or Bitcoin derivatives and all this kind of stuff. We are opening doors to pools of capital that previously just simply couldn't buy it. And I think that's really the underlying theme and trend of this cycle.
I love that you said the opening new pools of capital, because it leads me into my thought. And I feel like this is kind of like the prevailing, so many people, I was talking to, I don't even know, I think it was Nico of Simply Bitcoin in Vegas. We were just chatting about stuff, and he was like, man, I'm convinced that the price is suppressed. Like there can't be this much good news going everywhere. And so, I mean, you're the guy to speak to on this. I mean, there's no one that looks at this stuff more than you do on chain. And obviously, like, the easy answer everyone says is like, well, there's equal amount of people. If it's going sideways, equal amount buying and selling. Obviously, is it just more of like, there's been so much good news in 6 months that like literally all these things haven't played out yet. It's just like buy the news, buy the rumor, sell the news type of events where these things haven't taken place yet. I'd love for you to unpack this paradigm we're in right now.
Sure. So first things first, the news is irrelevant. Drop the news from your information diet. It's useless. So many people look and say, but there's so much good news. Why no price? And it's like, because
all the time.
No, totally. It is. And by the way, this is the default assumption. This is why financial media exists. Whenever a stock rips to the upside, it doesn't matter what happened. You'll go on, literally the financial media goes to their, like the lowest paid intern and goes, go and write a story on why Apple's down 3% today. And they'll be like, oh, it was the tariffs, or, oh, no, it was this, or it was the wind changed direction. They'll find some reason that is not the reason why these things happen, right? When you see it in the headline, it's been baked into the price for weeks and maybe months in advance. So you have to think about markets as a process, not a result. So a very good example of this, we saw in 2024, the ETFs went live in January. I think we opened the year about 40,000. We then sold off, and everyone was like, oh, look, what a dud. And then we ripped to 73K. Now, following that period, we then had 8 months of chopping around above $1 trillion market cap. Really, really important phase, in my opinion. That like 50, 60, 70K, I called it chop solidation. That phase, very, very important in my book, because it proved that Bitcoin is now $1 trillion plus asset. And I do believe that is going to be I would be amazed if we ever go back down below that level. If we do, it's a deep value zone. So, anything can happen in the world. But my view is that zone, we prove we're $1 trillion plus. Now we just have to work out how many trillion. So that's our floor from here. So with that as context, people are like, but why is there all this ETF demand and inflows and yet we're not going higher? So this whole concept of price suppression. Now, there's a whole lot of angles I can go down here, but the first one is there is a difference between your expectations of what should happen and what does happen, right? There is expectations and there is reality. Which one is more likely to be out of kilter? your expectations because you think that the world should understand Bitcoin much sooner than they do, or the reality of the situation, which is that it just takes a shitload of money to move a multi-trillion-dollar asset. So, people are, in my view, I think people's expectations are wrong and they expect the God candle. But then I just offer this very, very simple heuristic. Every single Bitcoiner I have ever spoken to, with zero exceptions, how many of your friends have you managed to convince? You can probably count them on half a hand, right? You just can't. So given that reality, the fact that you can't even convince your mum, your dad, your best friend to buy a Bitcoin, why on earth do you expect the rest of the world to work it out tomorrow? It's just not happening. It's just not happening. So getting your expectations correctly aligned with what is actually happening is important. Now, on the price suppression thing, it's a fascinating topic. It happens, right? There is campaigns to suppress a market for sure. However, I would be the way that I would frame this up. This is no different to any other market ever. I actually go so far as to say, like, if you're going to call it manipulation, every time you DCO, you also manipulate it. You're just not very good at it, right? So in terms of your size and scale, if someone wants to suppress the price to the downside, someone has an incentive to blow them up on the upside. Everyone has derivatives. Everyone has futures. Everyone has spot. Everyone has options. It's not as if there's not the same amount of firepower on both sides. So this concept of price suppression, you can argue that, yes, big actors, if you're, for example, if you're a very, very large actor and you want to buy $1 billion worth of Bitcoin, what do you need to happen? You need $1 billion worth of people to sell right before it moons. So you need $1 billion worth of incorrect people. How do you generate incorrect people? I don't know, get Jim Cramer to say that you should buy this stock. Yeah. Because when Jim Cramer says you should buy this stock, the lemmings in the room will go out and buy this stock because that's the best that they can. They outsource their thinking to Jim Cramer. Now Goldman Sachs could unload their stock on you, right? That's literally his job. It's to create the exit liquidity. So all markets require this. If you're a big actor, you want to buy $1 billion, sometimes you've actually got to sell to generate a bit of fear to then get people to sell to you. This is how markets work. So some people will call that market manipulation. I just call that markets. That is literally how they work. Now, probably even more important to this point, I do not believe that you need a central core 95% governing factor of market manipulation to explain why we're not higher. This is actually my core point. So let's accept that some form of market manipulation happens. My argument is that explains like single-digit percentages of what's going on. I can just look at what's going on in terms of coins moving on chain, flowing in and out of exchanges. We are talking about tens of billions of dollars a day. Now, these aren't coins that just like, oh, some dude just bought them yesterday and he's just wash trading. No, these are coins that are 3 years old, 5 years old. They were bought at the bear market bottom. They were bought last cycle. They were bought 2 cycles ago. $100,000 has been, and I know several guys here in Sydney who they've been around for a long, long time. Lord knows how many coins they have. Lord knows how many coins if you've been around for a long time, some of these guys have got a lot. And they've been saying like 100K was their like stretch target, will never happen price. And here we are. Think about what they can do to upgrade their lifestyle. And everyone's like, but why would you sell? We're at 100K. It's like, because you bought it $100 and you got thousands of these things. If you were in their position, I'd probably sell a little bit too, because like you never have to worry about a single thing ever again. Go and live your life.
Yep.
So in many ways, I think the central pillar of your argument doesn't have to be that the market's being suppressed. There could be suppression happening, but there's also just a lot of selling. It's just the reality of the thing. So yes, it's a part of the market structure, but don't make it your central thesis. Don't build your personality around it. Like at the end of the day, your expectations are that big markets move much faster than they actually do. And once you can accept that the market actually just moves a lot slower, and then you actually start looking at some of the data and the way this cycle is behaving, it very quickly turns out that we're actually moving very much the same as we did in previous cycles. So what is actually incorrect is how quickly people think things should happen. It's happening almost dead on schedule from every previous cycle, but we're 100 times larger. I would actually go so far as to say that we are moving way quicker than I ever anticipated at this size. We're moving much faster than we should be and yet people are screaming price depression because, frankly, they're a bit greedy. That's like, if you really want to get down on the nuts and bolts, they're greedy and they think that the market's like an ATM and should just give them free money. It's not. The market will do its thing. It's going to be slow. It's going to be tedious. It's going to be boring. That's a really good thing. Slow, tedious, and boring means big money gets more comfortable with it. I said this in Bitcoin Soul too. If I got my old man to finally buy Bitcoin back in 2020, and believe me, I heard about all the ups and downs, particularly the downs, because he went through the bear market. He saw all the swings. The volatility freaked him out. I said, just sit tight. And then it would go lower. And he's like, how long do I have to sit tight? I'm like, just sit tight. Right now, every time I speak to him, he just goes, number go up, love it. Number go up, love it.
That's amazing.
For him, he is super comfortable now. So people have got to realize that this is what it looks like when big money actually comes on board. It's slower, it's steadier, but it doesn't go down as much, right? We've had a 30% correction twice. Back in 2017, we had 40 and 50% all the time. They were shorter, but they were much more severe. Now it's like, you go down 30% and people think the world is over. So it's just this melding of expectations and reality.
I want to get your thoughts and have you unpack a little bit of the retail. I want to be careful with using Google searches. Maybe back in the day that would have been more poignant, but I know that data is less and less. However, I think it's somewhat important still, because the Google searches, in 2017 were massive. It was like Bitcoin burst on the scene. Obviously, it was like the world is getting exposed. Yeah, it was just insane, right? The world's getting exposed to Bitcoin. 2020, people were at home, and so people had time to kind of see what was going on. And obviously, there's explosion in liquidity across the world and paper being pumped into the system. But those searches, for all intents and purposes, were half of what 2017 was. And now we're at less than half of what 2021 was.
It's like
so
bear market lows.
Exactly. And so, again, I know people get very cautious about like, well, you can't use Google searches. I mean, at the end of the day, like you said, I mean, it's not like people are running to all of us and saying, retail being like, hey, James, hey, Brandon, like, get me into this Bitcoin thing. Like, this is amazing. So the Google searches to a degree are echoing what we kind of see on the ground. There's not, the conferences are pretty big. The Bitcoin conference in Vegas that we were just talking about, still a lot of people there, a lot going on, but the sentiment with the retail, like what is retail doing? Like, what are they sleeping on? Because it just, from like I said, some of the data, or at least the data we have with Google searches and all the way to just the sentiment, where is retail? And this feeds into the bears, or this feeds into the crypto crowd, or it feeds into other legacy, financial people. We're like, diminishing returns, guys, like, good luck. If you can't get more people in your little, protocol, your little money, then good luck. So what are we looking at going here with retail? Is it going to be big money that's kind of dragging everyone along, or is there these moments that are going to drag retail in? Like, when you look out on the horizon, what do you see here?
So here's a question for you. How many friends, I call them muggles, people who aren't in Bitcoin, that just don't get it. How many muggles in your circle have reached out to you this cycle saying, hey, is now a good time to buy Bitcoin? Have you had
only a couple?
Many?
One hand. Yeah.
I've had zero.
Yeah, less on one
zero.
hand. Really? Yeah.
No. Yeah, no, literally zero. What I have had are several people who have been in Bitcoin for many years. Recently, this is like in the last, 2 months or so, many of them reaching out and saying, hey, where's the best place to lever up to buy more Bitcoin? Where do I borrow against my stack to buy more Bitcoin? That's what I have received inflows of. And I think
I'm gonna correct. You're right. And I have not, I don't think I've, maybe one person, like you said, a muggle. Right? That's it. Everyone, a couple others were ones that were already kind of watching Bitcoin, maybe more financially savvy. Yes. So you are
correct. So that you're right. Maybe the only people who would probably contact are people who are into investing and they're finally clicked.
Yes.
Like my dad, he's finally gone, look, number just goes up. That's great. So we've seen an obvious shift in the investor profile. So the first thing is, I don't think that the speculative retail that we're used to with of previous cycles, I'm not seeing them. I don't see them coming back. I think a lot of people misunderstood how badly FTX nuked that entire sentiment. It is why crypto is so wrecked, because no one cares anymore, because they're like, it's just a levered Ponzi scheme. And then meme coins come out and they literally were a levered Ponzi scheme. And then they all collapse as well because they were full of fraud. So we're in this world where like there just isn't any narrative left for that momentum. What is left is basically Bitcoin. And now we're seeing Bitcoin Treasury companies, which are ultimately the altcoins or the shitcoins of this cycle, is my view. So we're in this world where it is a Bitcoin only world. People who are savvy with investing, people who understand money. Actually, I had a very interesting conversation. Won't go into the details for their privacy, but basically it was a dinner that I had. It was myself and 4 women, and they were all very, very like come from decent family wealth. And they were actually asked, I've never actually had this experience. They were asking really interesting questions and they were interested. It's the first time that I've actually had like a table of ladies that were all very interested, but they understood wealth. They understood inflation. They understood wealth preservation. And they were like, I've never heard it explained that way. And bang, light bulbs start going off. So that was a really awesome experience for me because I've just never had that experience before. But it was very much a reminder that people who understand wealth are clicking to it. And I really think that's the base layer here. We are seeing the people who actually understand. We're not seeing the speculators coming in. It is very much I have wealth to protect. I'm looking at the world around me. I'm seeing fewer and fewer options. I'm also probably experiencing that, like, really, I've got like 4 of my assets that are doing really well. Everything else is, kind of doing okay, right? Gold's doing good. Real estate's kind of, it's all over the place, a bit stagnant here and there. Bitcoin seems to be kicking ass. The Mag 7 and the not so magnificent 493. That's really how we're seeing the world bifurcating into winners and not winners. And there's very few of those winners. So I think that like the money side of the equation, high net worth individuals, even retirees, people who have something to lose are the ones who are starting to click to it. We're not seeing, your best mate who's, out there and, partying and whatever. I don't think we're seeing those folks going, oh yeah, I've got to come and speculate on Bitcoin. We're actually seeing serious capital allocation. And that is a very, very different animal. If we look at the ETFs, I haven't looked at the numbers recently, but I recall James Seifert and Eric Balchunas talking about it. It's like 80% retail. And that to me is just Bitcoiners allocating their 401ks and superannuations and all that kind of thing. That's going to be a huge chunk of that. So it's kind of people who already understand Bitcoin, or people who are, like my old man, maybe I should actually allocate to this, and the ETFs are just a really nice, convenient wrapper. It is much easier to explain to Bitcoin to somebody and not have to get them a cold card and 24 words and be like, don't lose this. If you lose this, they're gone. They're like, oh, what? I got to download this weird software. And no, if you can just buy this ticker, done, problem solved. So I think that's really the pools of capital that we're starting to tap into here. So it's just a more sophisticated crowd. I can't remember who said this. It might be Jesse Meyer or someone like that. But we're really looking at the adoption by dollar, not the adoption by per capita, right? We are not seeing adoption by a volume of people. We're seeing adoption by a volume of already existing money. People who have something to lose, have something to allocate, are starting to click to it. And it's no longer this strange phenomena that they don't want to understand. They're like, I've heard about that a couple of times. Actually, now tell me about it. I want to understand it now.
I could not agree more. And again, you're the guy to speak to. And this is, you see all the data, more, like you said, I don't believe all the rest of us, right? Because none of us are looking at the data, even Bitcoiners any more than you are. So that's where, but it echoes that sentiment. It's what we are kind of feeling. So in saying all that though, how do you balance this, the ethos, the Bitcoin ethos with, governments getting in? Are we at a point, and I ask this with a lot of people, I feel like the American Revolution is really kind of what we're going to. And there's numbers throughout society, there's the Fibonacci retracements, or there's numbers in society, right? As you well know. And 3% is one of those numbers, or 3. And so 3% of the people were really what fought the Revolutionary War here in America. And the other 97% were like, whatever, bro. I don't care. The king's not that bad. And then 3% of the guys were like, I'm grabbing my musket and I'm going. I'm not taking this garbage anymore. But then the other 97% won too, because they got the Bill of Rights, they got the Constitution, the framework that actually made America America. Everyone else got that, even if they were against the American colonialists or patriots that were taking on the British. So is that kind of what we're looking at here? Because I think a lot of us get into Bitcoin. I was talking to Pierre Rochard a month or two ago, and he was like, yeah, I got into Bitcoin, whatever it was, 2012. And I was like, yeah, let's go. Everyone's going to get this right away. This is a done deal. And he's like, here we are. So I
Yep.
think we all do that same thing. And then we realize, oh, this is going to be a long, slow process. But I've kind of resigned myself to, it's just going to be a couple percent of people that are going to get it. And then we're basically going to drag the rest of society along, whether it's, Bitcoiners, or maybe, like you said, some of these big, pools of money that are coming in. Is that, in your estimation, are we kind of at, hey, convert the king, get these big liquidity pools in to move society to this new standard as they start figuring it out? Or how do you look at all that?
Oh, absolutely, without question. Like there's zero doubt in my mind that that's the case. And one of the really good studies that I saw, and it was kind of it wasn't formalized, but Brandon Quittem did a great study. He was looking at like the Myers-Briggs, right? And he's like, what is the population distribution? And it's basically this chart where like it's a reverse Pareto, where you've got a majority of people are up here, and then there's like a small fraction of people who are particularly like INTJ, ENTJ, that kind of bucket of people. And the N was particularly important. But anyway, then he just asked in a Twitter poll, where do you sit on the Myers-Briggs? And you just scroll through the comments, and it's just INTJ, INTJ, ENTJ. I forget the other letters, but it's always IN, EN, IN, EN. The back two don't matter. But like he then took all of those Twitter responses and he plotted them as a reverse chart over the original of like what the population of the world is. Perfect inverse. The smallest proportion of the world in terms of the Myers, again, it's not a perfect model, but that doesn't really matter. The point is the smallest proportion of the world are the largest proportion of Bitcoiners. We are a strange bunch. We're not normal people. We are literally, quite like statistically speaking, not normal. So from that perspective, I think that summarizes it perfectly. You actually don't need the majority. And in many ways, I think that is a fantastic framework to look at this current cycle. It's kind of the old the Apple ad. You got to have the crazy ones. It's the crazy ones who push this stuff forward. So I actually didn't know that it was only 3%. I'm not familiar with US history, but if the 3% were the ones that fought off the British, that makes sense, right? This is literally the same thing, and I do expect it to play out much the same way. So I think a lot of people are looking for the volume of people, and you actually should just be looking at the volume of capital.
It's absolutely incredible. Like this is, man, these are just so many rabbit holes.
And actually, sorry, you mentioned before, just to close out, literally before I jumped on this call, I was building up some charts to look at, because right now the blockchain is dead. Like Bitcoin is like empty blocks. Sometimes you'll sign into mempool.space, there's like 110 transactions waiting to get confirmed. But at the same time, transaction volume is very high. Like it's low versus the peak in November, but it's still above like 99% of all previous history. And it's like, you're like, how is the blockchain empty, but we've got so much volume? So I'm doing a study on this as we speak. And basically we're seeing the dominance of $10 million lots of Bitcoin. The volume on chain, they're big chunks. We're not looking at like small retail sizes anymore. This dominance has been increasing since 2022. And we're seeing like, 85% are $100,000 plus transaction sizes. So we're talking like the average and the median and the mode of who is moving money around. It is bigger capital. So that is, a part of the dynamic. And Bitcoin has been talking about this for a long time, that the base layer is going to be a final settlement for big money. More retail will shift up to higher layers. I'm not at the level where I think that, Lightning is not responsible for empty blocks. That is first and foremost. Granted, it is going to be taking some transaction activity away. When we were in Seoul, we had 2 dinners, which we settled over Bitcoin. That would have been, 20 people times 2. So there's probably, 40, 60, 80 transactions, something in that ballpark, that moved on Lightning rather than on-chain. However, of those people, 5 or 6 of them had to do an on-chain transaction to get into the Lightning. So there's still, it's not going to be that Lightning just took away all that activity. So I'm not there yet, but at the same time, we are seeing it become this base layer, the container ship type idea. It's the big vehicles that are moving around capital. Now that's got a whole different story when it comes to fees and miners and all the rest of it. But we are seeing empirically that there is a size component to this cycle.
I want to, so this brings up another thing. So I'm going to segue us and then come back here in a minute. But so this goes into, just made me think of some of the objections you always hear of like, well, there's not a fair distribution of Bitcoin. Like, yeah, who is that, Brandon? Like, who is that, James? Like there's 10 million, a million. Like, yeah, you guys are using this network over here. What, what in your mind, what is the explanation for that? Is it, you kind of answered it maybe to a degree in the lightning, and it's taking some of it, but just the layers are going to be built on top of it? Is that what that is? And that, because it's hard to explain to the average person, right? And they're just kind of like, oh wait, what? Well, you just start losing them immediately. So it's just like,
Sure.
you know.
Yeah, so I ran a study some years back. I think it would have been probably 22, I think. And then we did an update, I think in 23. It was one of the last reports I did at Glassnode. And basically, we looked at the distribution. This whole argument of like Bitcoin is heavily concentrated. And basically, what that showed is that over the long term, we have actually seen whales and exchanges and all these big entities being diluted out of the system. We actually have a very, very large individual component. Now, Bitcoin also does not solve, and I think it's very important, it does not and will not solve wealth inequality. Quite the opposite. It's actually going to benefit people who can click to it. But you don't have to be well off today to click to it. Everybody has the internet. Everybody can think for themselves. I am, as we said before, I'm very confident that the vast majority of people will never understand it, but it will get baked into their 401ks. It will get baked into their pension funds. They'll get baked into the companies that they own, the S&P 500. It will become normalized over time. So they'll get exposure to it, even though they don't even take an active interest. As you said, the 97% will benefit from the hard work of the three. So it's not going to fix wealth inequality. But at the same time, when we look at how, like, people say, oh, there's 85% of the Bitcoin are held by 5 guys. It's like, well, no, not really. Because when you actually look at who those wallets are, almost always they're going to be an exchange, an ETF, a MicroStrategy, any of these entities that have thousands, tens of thousands, sometimes millions of customers. So if you look at Coinbase's wallet, they've got something like 3 million Bitcoin, 3 million Bitcoin, and however many tens of millions, hundreds of millions TBC, I don't know, it's a global entity.
Yep.
How many of those customers have a partial share? Yes, Coinbase is in control of those UTXOs, but legally speaking, they actually have customers who are creditors of that institution.
Right.
Same for the ETFs. Same for Saylor, right? He's got 508. He doesn't have 580,000 Bitcoin. His shareholders have collective ownership over 580,000 Bitcoin. So, it's one of those things where people don't actually look at the nuance because it's a nice little headline. In fact, I quote tweeted some other bloke the other day. He'd done the same thing. He's got like a table with the top 10 Bitcoin holders, and he goes, look at all these. When will it be decentralized? And I did the sum. I calculated. I think he captured something like 17% of the Bitcoin supply. And my question was, what about the remaining 87%? Where's that? And by the way, most of those entities was a Fidelity, a BlackRock, a Strategy. So and by the way, a lot of those were actually overlaps where the same coin he had in Coinbase is actually also custodied by BlackRock. So like you're double counting as well. So I'm like, let's be really conservative. Okay, you want to poke sticks? There's 17%. What about the other 87? Oh, there you go. That's actually quite distributed, isn't it? Turns out that people, all around the world in all different countries own this thing. So look, I think it's a bit of a silly argument because the world isn't fair, right? The world is never going to be fair. And that is just literally because some people are in certain places at certain time, have certain opportunities and nothing's going to fix that. That's the entropy of the world. That's humanity. Nothing solves this. This is actually part of the variability that makes life interesting. So the sooner that you just kind of let that stuff go, in many ways, I think that they're barriers that people who don't want to understand Bitcoin because they feel like they've missed it, they put up 1,001 barriers that they've heard from mainstream media to say, oh, it's right not to look at it. And actually, this is something when I left civil engineering and when I finally just threw in the towel and moved full-time Bitcoin, I wrote an email because basically I said I was going to move into finance, but I was like, all right, fuck it. I'll tell them what I'm actually doing. I'm moving into Bitcoin. And I gave them 10 points. And they were all different things about like energy, this supply distribution. I had like just little FUD busters. And the last one that I had, the 10th one, I said mainstream media. How many times have you seen a mainstream media article about Bitcoin? And you can probably count on one hand how many of them had a positive light. And I said, what do you think the reason for that is? The incentive structure of a media company is to get clicks and to satisfy your confirmation bias. Confirmation bias is a hugely powerful thing in markets. People want to be told that they were correct and that they should not have looked at this thing. what is the way, what's going to get more clicks? An article that goes, yeah, you know that Bitcoin thing that we told you about? That's yeah, it turns out it's not a scam. Turns out it's actually really quite innovative, and actually, it's probably one of the most important things. In we kind of fucked up. What's going to get more clicks? That, or an article saying it's a scam? Here's 10 reasons why it's a scam. You did the right thing by sitting on the sidelines and not touching it. You should continue to ignore it because our boss told us that it's bad, and you should stay away from it. Which one's going to get more clicks? The one that tells people you made the right decision by not doing anything, because that's their confirmation bias. At some point, it will flip around and will be like, how many articles do you see? You only ever hear about gold when it's going up once every 6 decades. When it finally does go up, then you start hearing positive articles. I suspect Bitcoin will be much the same. It's going to be negative, 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 and then we'll go through a period where it's so normalized that people just forget about it. And then it will only be talked about when it's going up again. And I think that's how it ends up playing out.
Do you think, I don't know how to phrase it, I guess, really, but so the paper stuff, I guess it's along those lines of like the ETFs and the paper, and price suppression. That's what it was. Like, I would love for you to explain the dynamics for the person, because there's a lot of people that are just getting to Bitcoin that watch this show, stuff like that. So that's where I was trying to, at a 4th grade reading level, how do we explain these concepts? And so for someone who's thinking about this and there's price suppression or whatever it might be, whether there is or isn't, how does Bitcoin change that dynamic? And how is it different? Even if there is, which there probably will be, or humans or people doing crazy things over time, how does Bitcoin change that? And like you said, like the FTX or, people having to learn over time, because if you're FAFO, if you're effing around, you're going to find out type of mentality with Bitcoin. How does Bitcoin change that, where people won't have to deal with that maybe as much going forward, or start to restructure some of those incentives? So I'd love for you to unpack that a little bit of how Bitcoin's so different, because that's, I think people, like, well, why is Bitcoin that much different than these other things we have, the other, gold ETFs or these other things that are going on? Why is Bitcoin so different and change the incentive structure so much?
Yeah, no, it's a great question. So there's a lot of levels here, and let me kind of start with an interesting or a slight aside. A lot of people know me for my on-chain analysis, which is literally looking at the database that is Bitcoin and pulling out information from it, saying, oh, look, there's transactions of this size. These coins have been held for this long. Here's how much volume's going on. Here's what I can decipher. Here's how much profit people are in. That is obviously a very core part of what I do. Yes, it's what I specialize in. But I actually consider myself, and I think you said at the top of the episode, I'm a Bitcoin analyst, and that's how I view myself. I'm a Bitcoin analyst. Yes, I specialize in on-chain data, but I also look at derivatives. I look at ETFs. I look at spot, futures, options, Lightning, the whole lot. I look at all of it, because it's all part of the Bitcoin economy. It's like saying to someone like someone who is an economist and saying you only specialize in studying like the energy market. It's like some people do that, but they also take into account the rest of the world, because the rest of the world impacts the energy market. So Bitcoin has many, many sectors, and more often than not, in fact, I would say 95% of the time, if not more, if you're looking at the ETFs and you're seeing outflows, I can almost guarantee you that if I look at the on-chain world, people are capitulating coins at a loss. If I look at any different futures are probably running in a negative funding rates. There's all these metrics that tell the same story via a different language. So you get a very consistent story. Now, I then go and try and analyze gold, for example. So gold is my second biggest holding, and I feel blind. I can't see anything. I can't see the gold coins moving around on the network itself. I can't see which institutions own what. I can't see the ETFs. Like once a quarter, I might get an update from a shitty data set. I can't, there's no transparency over like central banks owning gold. Suddenly you're like, wow, I've got price and volume and maybe some ETF metrics once a quarter. The thing with Bitcoin is I can see it all. I can see how much leverage is in the system. I can see how many options contracts are open. I can see how much futures, where the futures are trading. I have such a plethora. And by the way, this data is not hard to get. Like literally everything on my website is free. Like free at the website itself, but the data that I pull is also free. That's why I can make it free, because it costs me nothing except my time producing the charts. So we have such an unbelievable amount of transparency. You can see when shit's going wrong. So here's a good example of the FTX story. Now, at the time, back in 2022, I was working at Glassnode. So Glassnode has a tremendous data science team, very, very highly skilled. They've built all sorts of heuristics, and it's a complicated, difficult business. But they track Coinbase, Binance, FTX. They track all the exchanges. They've got labels for all these things. It's a constantly moving puzzle, but they've got some amazing technology to actually track these things. Now, we were doing a lot of reports because FTX was one of the biggest exchanges at that time. And a lot of our reports had to cover it. And we would say, like, I was talking to the data scientists, we actually didn't show their exchange balance chart often because our data scientists were saying, it's really hard to track these guys' balance. They keep moving shit around. They keep changing the way they transact. They move it from here to there. They're like, we feel like we're missing some wallets. They weren't missing wallets. FTX was missing the Bitcoin. So they actually had all the wallets. But again, it's not our job. So this is like a lesson learned. But it's not our job to look for fraud. Whose job it is to look for fraud actually is Chainalysis, who FTX was an investor in, which is kind of ironic. That is their job to look for fraud. So where was your bloody red flag? But anyway, nevertheless, it's one of those good examples of if we had have actually gone, well, maybe there's something wrong here. There is then a case, and you can actually now in hindsight, and hindsight's 2020, you can look at their Bitcoin balance, you can look at their USDT balance, Tether and USDC, and they all cratered. So did their Ethereum balance. They all cratered when Luna exploded. When Luna blew up and we sold off from 30K to 17 or whatever it was, you saw all of their assets just get wiped out because...
Hold on 1 second. If you are holding your Bitcoin on an exchange still or sharing your keys and your KYC information with a third party, everything you're learning about right now is completely moot. This is your wake-up call. You are only self-sovereign if you alone hold the keys to your wealth. Bitcoin is the first and only asset in human history where humans can actually custody entirely their asset. Custody sounds daunting at first, and believe me, it was for me 10 years ago, and I missed a year or two of massive gains, and I don't want that to be you. It's exactly why you need to talk to my friends, Tony Yazbak and the Bitcoin Way. His team will train you to do it right the first time. We just interviewed Tony the other day, has 50,000 views, an unbelievable response. People love him and his story and what he has to share in his mission. Head on over to thebitcoinway.com/Brandon to schedule a free 30-minute consultation today. Their 5-star rated service is exactly what you need. So quit sitting on your hands like I did a decade ago and get started today. Again, that's thebitcoinway.com/Brandon. Now back to the show.
Whether they had to refinance themselves, lots and lots of coins moving from there to Binance, like there's this kind of like inter-exchange thing going on, all sorts of weird stuff. So you can see what is going on in the rearview mirror, but also now that you actually go, well, we could actually see it in real time as well. So all of this to answer your question, what makes Bitcoin different? We can see it all. It's so transparent, and the on-chain, the Bitcoin network itself is the thing that connects Coinbase to the ETFs, connects ETFs to their customers, connects the blockchain itself is how coins change hands. And the Coinbase entity itself, lots of data providers have had a lot of trouble consistently maintaining Coinbase as an entity. 3 million Bitcoin. Most data providers don't have 3 million Bitcoin listed. And the reason is because they've got the Coinbase, the exchange, where you like retail and people would buy and sell. You've got Coinbase custody, which looks like it also custodies the ETFs. GBTC is in there. There's going to be some of Sailor's coins in there. Coinbase custody is its own animal. And a coin may look like it's left the Coinbase exchange, but it's actually just moved into a custodial wallet. And then sometimes that, like when they're moving around inside those custodial wallets, a lot of people, I think, wrongly assume that it's all just like, oh, it's just Coinbase updating their database. No, a lot of these ETFs, they must take possession of those coins. So there is still an on-chain footprint as these things transact in and out. So we can see it all. If one of these ETFs doesn't have the coins, you'll be able to see that they don't have the coins. There's literally firms out there tracking this stuff. And this is where I'll actually push back heavily on the paper Bitcoin claims. A lot of people say, show me that Coinbase actually has the coins. To which I go, folks, if you think the risk is that Coinbase doesn't have the coins, you are kidding yourself. The risk is that Coinbase has so many of them that they are a huge honeypot. The risk isn't that they don't have them. It's that they got way too many. 3 million is a massive holding, huge risk to the industry. That is the risk, that they have too many coins, not that they don't have them. So now what you can't track is off-chain liabilities, as we discovered in 2022. All these firms had, yes, you've got a bunch of Bitcoin, but you also owe some guy, $10 billion and you got $100 million worth of Bitcoin. So the off-chain liabilities aren't there. But at the same time, we really expunged a lot of that stuff in the previous cycle. We'll get there again. There will be a point in time where we have too much leverage, too much debt. It will happen. But as it stands today, we can, and I've written about it for the last month and a half. I've been saying, guys, look, it looks to me like we have transitioned in from a spot-driven market since April. Very healthy, very stable. From April onwards, it is now looking a lot more futures and leverage dominated. We have entered the euphoria zone of this bull. Things can move very quickly. They can also blow up very quickly. So my subscribers are already very well aware that we have phase shifted. I don't know how far we can go. I don't know how long we can go, but I do know that we're going to see more leverage, more debt, more of that stuff build up, and it's going to be very good to the upside and horrible to the downside.
What are those? Yeah, that was some of the stuff I wanted to ask you. It's a great segue to a degree. I want to get that in a tiny bit, but what are some of those things that have signaled that phase shift that you've been seeing and saying, whoa, alarm bells are going off? Like, hey guys, like look what's happened here.
Yeah. First and foremost, just on-chain activity is just dead. With empty blocks, as we mentioned before. Mm-hmm. So there's just very little transaction moving around on-chain. Spot volume and ETF trade volume are down to the right. They peaked in November and they've just been declining ever since. Futures volume is at all-time high. Open interest is ripping to the upside. New all-time highs like $140 billion or something in aggregate, futures and options. As a percent of the Bitcoin market cap, it's pushing up towards 6%. Historically, it trades between 4 and 5%. So this is an all-time high of leverage versus the Bitcoin market cap. So there's just a lot of things where spot on-chain dynamics are lower and off-chain leverage options futures are ripping to the upside. So there's a lot of characteristics, but that's just a nice, simple summation of what's going on.
The instant auditing, in essence, so everything we've been talking about and what you do so well, that the big difference, just the digital nature and all of the clarity and transparency you can see versus say a gold and silver ETF or something where there's really just it's opaqueness, there's no transparency, and it allows these funny games to be played ad nauseum and just kind of in perpetuity to mess with the price. Is that because again, like we said, Bitcoin, the price could be manipulated up or down, whatever it is. But over time, that instant auditing, when it is happening, that's what would then clean basically the riffraff out, would it not? Isn't that one of the big innovations of Bitcoin in that sense, where it's, hey, we're cutting this off now. You might have played it for a little bit, but we're cutting off. We're gold and silver. I mean, it's been 20 years, we'll just say of the ETFs, at least since they've come out, where, hey, it's like, who knows what they're doing? And no one knows. Like, you can't audit it. So
totally. No, the fact that no one can tell you how much gold is in X person's vault is exactly the case. Like, how much gold is in we know how much Bitcoin is in Coinbase to a fair degree of, it's somewhere between these ranges. This data provider says this guy says this, like we've got a ballpark and say, well, here's how much Bitcoin they have. And then via various other methods, you can say, well, they've got so much debt or they've got basically no debt. So you can actually compare and say, well, how much is your off-chain book versus your on-chain book? And if these two things start to diverge, I'm withdrawing my coins. I'm not going to be there for that event. So, which I wouldn't be there at Coinbase anyway, but that's the point. Yep. If I see one of these ETFs start levering up, and there are various ways that we can see this leverage building up, you need a lot of fraud really to hide this kind of data. But how do you know how much gold is in the vaults? How much gold is in Fort Knox? I don't know. Exactly. Like suddenly there's all this gold being imported into America in the last couple of months when the tariffs are going live. It's like, why? Is that because there's, I don't know, you maybe need to put the gold back where it came from? No one knows. Whereas with the Bitcoin, you could be like, hey, look, there's El Salvador's Bitcoin. I can see it, right? We can all see it. So it's one of those types of dynamics where the fact that we can call bullshit, and most importantly, and this is why self-custody is so important, the lesson that I took from FTX when it blew up, I mean, there's many lessons, but I always take one like a token reminder from that cycle. In 2019, it was when it exploded to the upside, and I'd only just worked out what Bitcoin was. We're trading at 3-4K, rips to 14K, and I felt pain to the upside. I didn't stack enough, and I'll never forget that feeling. When FTX blew up, it was, okay, that's an annoyance. But it wasn't, oh shit, I'm destroyed, I'm ruined, I've lost all my coins. I was like, I literally looked at my cold card and I said, good job. Because I know that all my coins are safe, secure, unaffected. It's a price annoyance. I'm like, it'll recover. It's a bit of a pain in the ass, but I didn't lose anything. I don't care that my net worth got slashed, 30% down or whatever it was. I didn't care. That wasn't important to me. I didn't lose anything as a result of that. And that dynamic, the fact that people can say, no, I'm going to step away from that. I'm going to sell that and just take my assets out. And I suspect that when the ETFs, and they'll eventually have in-kind redemption and withdrawal. So eventually they'll get to that point and people can just literally say, no, yeah, I'm good. I'm taking it out. And the fact that we can see it, we've got so much transparency. As I said before, I feel blind when I look at gold. I feel blind when I look at equities. Now that I've got so much time and proof of work studying Bitcoin itself, I struggle to invest in other assets because I'm like, I have no edge. How can I? Like everything is opaque bullshit. And you're like, this is just TradFi nonsense. It's totally rigged. Whereas Bitcoin, I have more edge than like 99% of Wall Street analysts will ever have on this asset, simply because I can see it. And I've spent, a couple of years studying the data. So, that kind of stuff just gives me a lot of, I'm going to forget which market analyst says this, but put all your eggs in one basket and watch that basket very carefully. That's pretty much my philosophy. If some dude in the TradFi world looked at my portfolio and saw like 95% Bitcoin, he'd be like, what, are you insane? I'm like, maybe, but I know a lot about that 95. I know a hell of a lot about what's going on. It's the 5 I'm worried about. I don't know anything about the gold. I don't know what's going on. All I know is that number's probably going to go up. That's my thesis.
Gosh, you just made me think of like so many memes and so many like rabbit holes right there alone. It's just like,
and also that's one other thing. Gold's meme game stinks. That's why Bitcoin's kicking its ass, because Bitcoin's meme game is so much better.
It was one of the things that popped in my head was that too. It's like one of the bets on, I tell people all the time, there's so many reasons to invest in Bitcoin and buy Bitcoin, earn in Bitcoin, whatever it is. One of those million reasons is the social layer. Like you have a younger generation who like they're looking at the legacy system constantly imploding on itself with opaqueness and, like information asymmetry, like and it's touted as like, well, it's the inefficiencies of the market. You can get an advantage. And it's like, no, it's like, it's not what you know, it's who you know. Like if I can get closer to the printer and they just don't tell you that, right? Like, it's like, It's just a complete scam. And then you have the younger generations looking at all that and they're like, I'm not playing that game. Like I want something that's transparent, the rules, not rulers, moniker, I guess, to a degree. Right. And it's like, I'm not playing this. Like you guys are morons.
I had another experience literally yesterday. So I own a bunch of US stocks and, I've got 2 different apps, 2 different brokerage apps. One of them is a new upstart company and very good, right? I got my dividends like 3 days after they were paid. That's because we had a public holiday here in Australia. So I gave a little bit of leeway, but on my like traditional old school part of my banking app, I literally called them yesterday and I was like, guys, look, this dividend was paid 2.5 weeks ago. I know there was a public holiday last Monday. Where is it? And they go, oh, yeah, so for international dividends, we've received it, but we only pay it out after 21 days. And now I'm like, okay, so you're going to go and collect the interest on my dividends for 21 days before I'm like, it's a scam. It's a scam. Why do I own any of this shit? I should just sell it all and just own Bitcoin. I know it. It's just a good example of like what we're here for. Like, it's a raw.
And it's the greatest trade. I mean, it's the greatest, there's what better trade is there than defunding this legacy, inflationary, fiat, corrupt, debt-based monetary system we have. Like there's no better investment you can make than I'm pulling this out of the system, sucking the oxygen out, doing my part. You guys can collapse. You can be in the Titanic, go down with the ship. I'll be here in this scary little life raft, this $2 trillion asset. It's small. It's in the dark sea. I know it's scary, but I know you're going down. Like I 100% know you're going down. It might take a little while. It takes a few hours. But I at least have a chance to survive. And those
every time I stack sats, it varies. It varies how much. But like I've got 2 balls that I'm holding. I'm trying to weigh up which one's which. One of them is like I'm buying Bitcoin because it makes a hell of a lot of sense. It's a good investment, and I kind of understand where it's going. And then there's another one that changes in weight, which is just a fuck you. Like and that one, like sometimes when I get like a phone call like that, where I'm like, you telling me you're ripping me off for like a month and a half? the fuck you goes up a lot. You smash buy and you're like, that's go down, go to hell.
Literally. Oh my, yeah. I was talking
funny,
to
isn't
CJ
it?
Constantino. Yeah, I was, and he was like, I hesitate to say it, but I think like all this Bitcoiners been there. He's like, I overdrafted on my bank account the other day. And I was
Totally.
like, yeah, heck yeah, man. Cause it's like, I'm defunding. And then it's like, you get to a point where like you're getting hit with like a service charge, a monthly charge, because you're under $1,000 or 5,000 or $100 or whatever. It's like, what is going on? Like I'm paying you to hold and that's not even to account for the 0.1% they give you in interest, which is way below, the real
Totally.
rate. You're always paying them to hold your money. It's just the wildest thing.
Yeah.
Okay,
they probably do stuff the same in the US, but you're right. Like the default bank account here is like 0.1%. But then they also have these little games like they list on their website. You'll get 3.5% or 4%, but only if you only deposit over a certain amount. And if you withdraw 1 cent, then it actually defaults back to the 0.1. And like people live their life where, I don't know, maybe I just need to pull $100 out to go and pay for dinner or something. So the whole thing is a scam to just like take your money in. It's like, I'm going to take it all out and take it out for sure. Stuff.
Yeah, and then what are you going to feed me on then? If I have nothing in there, if I just take it all out and put it in Bitcoin, I have zero in my account, then what are you going to take, bud?
They're going to take it from the 97% who will never get it. That's
exactly.
How that works.
Yeah, no, it's so true. All right, I want to transition a little bit because we could keep going on these rabbit holes, which I love. I want to get your thoughts though on we touched on a little bit earlier of some of the degenning has now kind of left the altcoin, or I guess it was like ICO's altcoins to a degree, years ago, and then it went into the the NFT world, I guess 4 or 5 years ago, and then it was the meme stuff even that kind of really quickly came out. I feel like those cycles get shorter and shorter. People just
that's a very real
they get wrecked
thing.
faster and faster. So that was what was happening, but for all intents and purposes, I mean, the Bitcoiners and people that love sound money, I mean, we kind of benefit to a degree because a lot of that looks like it's going to be coming perceivably to the Bitcoin Treasury company. So I love your thoughts. I want to talk on Sailor here in a minute, but also I want to start with just let's start with Sailor, and then I want to just talk about the Bitcoin Treasury companies in general, and we can kind of flow down from there.
Sure. So no, I think you're dead right that the alt season has moved to, it's been on Bitcoin, which is kind of strange and bizarre. My first, and I think most people have a very visceral reaction up front when they see all these companies, doing SPACs or listing on stock markets or taking over some small company and then starting to buy Bitcoin to juice the stock price. The correct and visceral response is, oh, this is a shit show. This is going to blow up. And by the way, I believe that is true, just probably not yet. I think, and it will be a bifurcated market. There will be some companies that manage to escape velocity. Most won't. And that is, again, even amongst Bitcoiners, there is going to be a 97 and there's going to be a 3. And the 97, like all startups, won't make it. Because at the end of the day, these companies are going to have to reach some kind of size, scale, shelling point. They need to reach some kind of velocity because, and I've got this long-standing thesis, which is the more that I study it, the more it plays out in the data. You'll often hear people talk about MNAV, multiple of net asset value. If you've got $100 billion worth of Bitcoin and your market cap's $200 billion, your MNAV is 2. Your company is worth twice your Bitcoin treasury. I've got this long-running thesis that gravity of MNAV is towards 1. That doesn't mean it has to be 1. It means gravity over the long term is towards 1. Companies have to do stuff. They have to fight gravity. They have to jump. They have to create excess volatility. They have to create interest to have a premium. And I come to this opinion, but I actually think it's a fairly simple thought experiment. Go to the extremes. If the company stops doing anything, they don't buy Bitcoin anymore, they don't issue stock, they don't issue bonds, they just go about running their business, but they hold a bunch of Bitcoin, then in theory, they should trade similar to the ETF value, right, of their Bitcoin holdings, because that's the equity. That is literally the equity in the company is the BTC. Minus debts. So that's the ETF side of the equation. If the stock goes too high and the premium, the company is trading at 10 times the Bitcoin treasury, what does the company have an incentive to do? Sell stock, push that down, buy Bitcoin, increase the treasury, push the stock price down. So they have an incentive to get it back towards 1 as well. Now that doesn't mean it goes to 1. it means that the higher it goes, the more incentive they have to get it back towards 1. Now, there is another side to it. Imagine at the long term, where every company in the world is just like holding Bitcoin is a normal part of doing business. How do you think you're going to value the company? The Bitcoin Treasury and their ability to accumulate more. Yeah. It's that's simple. So it's going to the only differentiator you have is the thing you have that isn't the Bitcoin. That's the long term. So therefore, your MNAV is going to go towards 1 because most companies are shit and they're going to go to 0. So at the end of the day, this is it is just a Pareto distribution. So in the immediate term, there are going to be companies that have massive MNAV premiums and they can monetize all this stuff. They're small and nimble and they grow. And then you get to the sailors and the strategies of the world. Here's your example. Metaplanet's really the other one that's got a lot of people talking. Tiny company, massive premium. Strategy just bought their entire treasury, 10,000 Bitcoin. So Metaplanet just hit 10,000 total Bitcoin. Strategy bought that in an afternoon, one afternoon, right? So that's like one capital raise. Big company, much smaller premium. So as it stands today, the only 2 companies that I think, I did a whole study on this on Friday, actually, last Friday, where I basically look at a whole bunch of different companies. Some of them are miners, some of them are strategy, Metaplanet, Semler Scientific. And I ran through a whole bunch of different metrics, how their prices perform relative to Bitcoin, how their MNAV has changed, a couple of weird metrics called like days to replace and days to cover. I won't go into the details of them, but basically a series of different metrics to do a relative value. And through various phases of this, it became very clear that strategy and Metaplanet are the 2 that stand out. Now, I didn't look at all of these companies because there's too many of them. They're springing up all over the place. Of my sample, strategy and Metaplanet were the only ones that stood out, and they were on opposite sides of the spectrum. Small company, big premium. Large company, small premium. Now, in the long-term arc of this thing, strategy has a very unique position in that they are basically tapping into the fixed income market. And we mentioned this at the start, this idea of this cycle being about tapping into isolated pools of capital. Strategy is in the most unique position in US markets because it can issue Strike, Strife, Stride, these preferred stocks. Mm-hmm. It's been doing convertible bonds. It's doing all this financial engineering to tap into the US pool of capital. Metaplanet is doing the same in Japan. And I looked both of my brokerages, both the Upstart and the old school one, neither of them I can access the Japanese market. So I'm a trapped pool of capital that I can't actually get into Metaplanet. It's not even a thing I could buy if I tried. So from that perspective, they're tapped into the Japanese market, which is another massive economy, right? Massive, massive economy. They've also got an arbitrage thing there where, if I understand correctly, spot Bitcoin is like a 45% cap gains tax, whereas equities is less. So for a lot of investors in Japan, it's actually better to own the equity than it is to own the Bitcoin, which is, these are those very unique concepts. Now, if you go to the US market and there's going to be like 50 other little attempts to be a strategy, they'll come and go. And my opinion is they will probably come and go. They'll have a flash in the pan, they'll appear, they'll rally, they'll have MNAV expansion, then they'll just get crushed. That's my base case. I expect that to happen because we have seen this before. It's called shitcoins. We have seen shitcoins play out cycle after cycle. What happens when you print more and more and more shitcoins? There is not enough demand to juice all of these things to heavy premiums. There's just not. At some point in time, all of these companies are going to compress towards their net asset value of 1. Now, what happens when you start getting that happen at scale? Because yes, Bitcoin has had a tremendous run so far, but at some point in time, number will go down. Number will go down. When number go down, the paint comes across the eyes and everyone goes, oh shit, I'm holding a company that's worth 10 times its treasury value and it's already down 50%. I'm about to get crushed. And then they wait and they wait and they wait and then they finally sell it all and puke it out the bottom. Now, when the MNAVs get closer and closer to 1, if it's accretive, when they've got a premium, when the MNAV is like 5 or 6 or 7, if it's accretive at that point for them to sell stock and buy Bitcoin, when the MNAV goes below 1, it's accretive for them to sell Bitcoin and buy stock, buy their own stock back. So now you've got a scenario where the smart money in the room, the devout people who just think that Bitcoin is number go up technology forever, This is going to hurt a lot when it happens because your confirmation bias will say it can't happen. It's going to happen. A bunch of these companies are going to puke out their Bitcoin at the bottom. We have seen this before. Miners have always been pro-cyclical. They realize at near the top of the bull, oh man, I got to go and buy all these mining rigs. Look at all this profit I'm generating. And I'm not only am I going to go and buy a bunch of new miners, I'm also going to hodl all the Bitcoin that I just mined. And what happens? They literally hodl everything through the top. They ignore all the warning signs. They invest a bunch of capex. The market tanks, and they end up bankrupt, selling everything at the bottom. And they hodl their treasury as long as they can, and they're going to puke it out at a cheap price. And even then, they go bankrupt because they hodled too long. These treasury companies will do almost, this is my base case, they will do the same thing. Not every company. The amount of times I say that on Twitter and people are like, Strategy would never do that. Strategy is a little bit different. They have their size, scale, and escape velocity. All these other companies, TBC, very, very much TBC. But CEOs have a duty to their shareholders, not to support the price of Bitcoin, but to stop themselves from going bankrupt. The job of the CEO by law is to take care of their shareholders and their share price. They have to do it. If they don't, they're not going to do it to protect the Bitcoin price. Just like, and yes, it may taint their reputation. That is the risk that they're taking. They will have to deal with a bear market. And as we know, 97% of the population don't get it. 3% of the population will get it. Who's that 3%? The people who understand that number will go down at some point and prepares for that environment. People who just think numbers going to go up forever, it's going to be a very, very painful lesson that we've already learned with miners and with shitcoins. I believe it's going to play out exactly the same because that's how it always plays out.
It just makes me think of, again, it's all correlates. It's all the same trade, right? There's been the meme a little bit on Twitter even recently. Like, it's
100%.
all the same trade, right? Like the debasement, the stocks going up, all the debt accruing, all the same, 8% or whatever. It's all the same trade. So everyone playing these funny games in the fiat world. It's just wild. So you keep making me think of that with all the correlation and all of it correlating to one.
There's only so much demand for companies who are buying Bitcoin. There's only so much demand for it.
Yeah.
Because let's face it, you're not getting serious like pension funds. Pension funds aren't going to start piling into the 45th Bitcoin treasury company. It's just not happening, right? You're only going to have degenerate retail investors who want to just jump on the latest momentum trend. We're going to see this thing compress fast, hard, and quickly because there just isn't the money to support all these things. It is literally the same shitcoin play. It doesn't matter that they're buying Bitcoin. The fact is there's not enough money and buyers willing to juice these prices and get them all to sustainable previews. This is not going to happen.
So in saying all of that, and you kind of touched on this a tiny bit, but do you think is there any point or on the horizon in your eyes where there's going to be a super cycle? Because, humans are humans. So we go through cycles. That's just life. So everyone expects a super cycle at some point. Like when you look out, is that ever a case? Is that in the near future? Or like, yeah, maybe, in some far off distant land? Like, what do you say to it's like, we're going to have the super cycle? It feels like we're always going to have those ups and downs, just how humans work, how life works.
Yeah, of course. And I guess the probably the more poignant question is which top? Because I could say that Bitcoin's been in a 16-year super cycle. Which top? There's been many tops. There's lots of tops. But there's obviously tops that are more important than others. And why are those tops important? 2017, 2021. Why are those tops important? Because they shift psychology. That's the most important thing. Every single investor has a limited amount of, like, you can't just invest indefinitely. At some point, you run out of dry powder. Case in point, a lot of people have a monthly salary. You get paid. Once you've invested, you don't have money for another month. And a lot can change in a month. As we know, the world changes by the hour at this point. So a lot can change in a month. Now, if you've got big pools of capital, they have to either pull money from somewhere else, or they've got to rotate it, or they've got to lever up. And the more that people lever up, the reason why you see when the narrative is that there is no top, it's a super cycle, Bitcoin has no ceiling, it's going up forever. When all of these things are the dominant narrative, everyone's already invested. They've already rotated. They've already levered up. As I mentioned earlier, I haven't heard any calls from muggles. I've heard lots of calls from people who are already in Bitcoin saying, how do I lever up? They're not asking me, how do I lever it up at 20K in 2023? They're asking me, how do I lever up at 110K in 2025? When was the better time to lever up at 20K?
Right.
No one wants to do it then because it's scary. But at 110K, Bitcoin's bulletproof, can't go down. That's why people take too much risk. So every single bull market exhausts itself to the upside eventually. Just the same, every bear market exhausts itself to the downside eventually.
Mm-hmm.
Because at some point in time, for an asset like Bitcoin, for shitcoins, they just keep going. But for Bitcoin, because it is a desirable asset and it's here to stay, at some point, all the speculators and all the bad leverage and all the malfeasance and everything, it's gone. The price is down long enough and it's been there long enough, right? Time and duration and depth. How long does it take to actually reach some kind of serious depth, and how long do we stay there? All of those things are very important, but at some point you shake out everyone with paper hands. Everyone with weak hands is gone. Who's left? Only buyers, only hodlers. There's no sellers left. At some point, there are no buyers left. So markets just hit this, like they hit an exhaustion point. So probably the more important question is like, not super cycle, but how do we define tops and bottoms? How do we actually define the tipping point? Like what does it matter? And by the time you've worked out that it's a top or the top, you're probably 6 months into it, at which point you're probably much closer to the end of it anyway. So like people kind of lose, and that's my base case here. I think a lot of people are going to lose track of where do we top, where do we bottom? Because I use a saying that's the bull market will author the bear that follows. If we have a bull market like we've currently had, this like beautiful stair-stepping price action, it's very hard for me to construct a 80% correction drawdown level. I mentioned before that 2024 level, if we sell off from here and go back down to 75K, that's like a 30%, 40%. Is that a bear? Because historically, that's nowhere near a bear, and people don't quite think about going down 95% is going down 90% and then getting cut in half. That's how bad 95 is. So going down 40% in the TradFi world is doom and gloom. In the Bitcoin world, it's like, oh, it's a bull market correction. A bull market correction is down 40. Yeah, exactly. So if we were to bottom 40% and then spend, I don't know, 6 months there and then rally again, is that a bear? Are people going to update their like cycle bottom charts to say like we started a new cycle, or are they not going to know where we actually stopped? On the flip side, if we just teleport to $1 million, now I'll give you an 80%. Doesn't take me hard. It doesn't take me long to work out. We're coming back down to 200K. Like that's going to happen. So you can kind of see that the upside defines the downside, and the longer that we stair step higher, the way more healthy this is. The more we can actually continue to just climb and climb, because we're forming confidence on the way up. When you start going parabolic, and that's why so many people like, but we haven't had the parabolic euphoric top. I'm like, here's 2 points. First things first, if we do, I almost guarantee that you won't sell. So what are you actually looking for? And if we do have it, you're about to have like a 2.5, 3 year bear market. You don't want it to go parabolic. You want it to be boring and stair stepping upwards. That is the best possible format. So I think a lot of people, again, comes back to that expectations and greed. They want number go up, even though when it actually happens, they're going to go, I'm rich. And then it's going to all crater in and they're not going to be rich anymore.
Lending. I want you to touch on your thoughts and just unpack the Strike. We talked about Nakamoto and Sailor and some of these companies and these treasury companies and what they're doing. But then we have the lending that's really starting to come out, which is kind of plays into what we were just talking about with as price goes up, people are going to be lending more as more options come out and the interest rates are driven down by competition. What do you see in terms of, we touched on some of these companies possibly blowing up over time, right? It's just natural life cycles of companies and markets. But does that affect, or will that affect the sell pressure as people are like, you know what, I'm just going to lend and I'm going to borrow against my Bitcoin and it's not, moving per se, or at least in theory, it's not. How does that, or will that affect the price? Because it's people are lending against it as that, as price continues to go up over which will probably this cycle, right? This cycle and the next cycle are going to be huge for that as you see bigger and bigger contingents of Bitcoiners accrue more wealth. So I'd love for you to unpack some of your thoughts on this.
It's very hard to blow up when the market's ripping new all-time highs every second Tuesday. It's very easy to blow up when it's ripping new cyclical lows every second Tuesday. So a lot of people are going to lever up at high prices because they feel confident that Bitcoin is now in a new paradigm, and they will defend that level. They will buy Bitcoin, they'll add more collateral, they'll do whatever they have to do. It's like your mortgage. People will sell everything in the house to defend the mortgage, and then when they finally go bankrupt and they lose everything, that's how these things usually go. So almost certainly we will have people levering up way too hard at way too high of a price and thinking it'll never go back down to 100K. Like we're at 300K, it'll never go back down to 100K. And they lever up to 110K and the price goes to 90. And then it goes to 500, but it went to 90 beforehand and they lost everything. This is what happens in market cycles. I don't know. Again, I don't know where these levels are. It doesn't really matter.
Right.
But yeah, be very, very careful with, be very conservative is the right way to think about this. Ignore everyone who tells you something can't happen in markets because they are lying to you because they don't know. I don't know. No one knows. The sooner that you accept you don't know the future, the better off you'll be. So never assume something can't happen. Here's a story that I have where I learned this lesson in the real. In 2019, I had finally clicked to what Bitcoin was, but I'd also worked out what options were. And I'd been studying all this on-chain data, and again, very, very early. Like the realized cap was like 3-4 months old. But the realized price at that time was about six grand. And in 2019, remember I mentioned that we ripped to 14K and I was like, oh shit, I didn't buy enough.
Yes.
So on every dip, I would be selling puts. Now, when you sell a put, that basically means that I am willing to buy Bitcoin at $6,000. If it goes below that, I'm on the hook for it, right? So I have sold that Bitcoin at 6,000 and someone's going to buy it off me. It doesn't matter where the price is. So I was collecting all these premiums. It was great. And I was looking at my portfolio grow and it was like part of my DCA strategy. And I was like, we're never going to go back down to 6K. March 2020 shows up. We did. We went straight through it for about, I think my liquidation level was like 4,000. We went to 3,800. I held this position for more than 12 months. 12 months. And I was so in the green and it, whoop, thank you very, and then it went up. Then I went to 60K, by the way. So I would have had all of that money. So not only did I lose my, the profit that I was in, I lost all my collateral, completely wiped out.
Jeez.
These things can and do happen. Do not get yourself in a position where you're going to get a phone call that says, thank you very much, you've just liquidated your whole account, because the price will then go to $1 million and you will have a hell of a lot less Bitcoin. So at the same time, I think the lending market is massive. It will be massive. I think it makes a lot of sense. I've certainly thought about and considered when I would do it myself because I don't want to sell my Bitcoin.
Right.
But do not lever up your Bitcoin in a way that you could potentially lose your Bitcoin. It is the number one way that you will lose it is by leverage. So be very careful with it. Use it constructively. Use it carefully. It is a tool. It cuts both ways. But if you treat it correctly, it can be a very powerful tool. But just don't get to $1 million Bitcoin with less Bitcoin because you levered up too hard at the wrong time, at the wrong place, and you believed something couldn't happen because some influencer on Twitter wanted your likes. Don't believe them. No one knows what's going to happen. You have to assume that anything in markets can happen. Risk management is about having a plan. So if you are going to enter this kind of a trade, right, it doesn't matter if you're doing it for living expenses or whatever else, have a plan that if something happens and you're like, your odds of getting liquidated goes from 2% to 10%. Have a plan for what you're going to do. Are you going to pay off a chunk of the loan? Are you going to sell this asset and then pay it off? What if that asset's also down because the whole world's having a blow up? Whatever it is, be ready to deal with the risk so you don't end up with less Bitcoin because it's going to happen to a lot of people because it feels normal. People are like, oh, it's never going to happen again. And it does, believe me.
It's incredible. All right, before we roll into the price and just talking about what we're seeing, what you're seeing there, and your thoughts on all this, so when I got into when I was leaving school, Michigan State University, it was 0809. It was the great financial crisis, and that's what really woke me up and really jarred me from the political system. I was very political, and I realized it's not red versus blue; it's the state versus you. It was collectivism versus individualism, and these guys were all on the same team. All the politicians were on the same team. And so that led me down the road to Creature from Jekyll Island, reading all the books and central banking, monetary history, all this stuff. And one of the first guys I found was ironically, it was Robert Kiyosaki's book with Donald Trump. And I didn't know who Kiyosaki was, but I knew who Trump was in '09. And then I found Mike Maloney very, very soon after that, with the gold and silver, the guide to investing in gold and silver. And there's so many good things. I mean, even every Bitcoiner, even reading Mike Maloney and any of his stuff is just phenomenal. He's a phenomenal teacher. And he always talked about, people know the value or the price of everything, but the value of nothing. And then one of the other things he always did was, taught me 15 years ago of finding real value in society, of measuring things against each other, because we're always using these fake paper currencies
Relative
to
value.
determine. Yep. Exactly. And so you don't know the value of anything because these currencies are fake. So where I'm going with all this is I would love your thoughts on, is Bitcoin showing the invisible crash? And Mike Maloney always talked about this. And every time you measured everything in life against gold, against that hard asset, that hard money, it generally was coming down over time, over long periods of time. And you would see very easily the crashes that were going on in society, even though they might show, the stock market could be at, whatever, the Dow, I don't know what's at now. I have no idea, 30, 50, 1,000, whatever, could be at 1 million, but we could all be in the streets. So, it's happened in Venezuela recently, stuff like that. Bitcoin, to me, like 5 years ago, it just kind of dawned on me. I was like, oh my gosh, like gold just wasn't doing its thing yet. Now it, as silver, gold, and silver have been now catching up a little bit to what they're supposed to be doing. But it was, you're looking at Bitcoin, you're like, this is the invisible crash. It's the price in Bitcoin 21, right? Everything was crashing in Bitcoin. And it was like, wait, is this the thing? Is this the yardstick that's measuring all the assets on earth, and everything is crashing, and we're living through it. And that's why everyone's getting poor and poor. So I would love your thoughts on that, and just kind of your take on this invisible crash, that Bitcoin, to me, is the greatest yardstick and measuring stick for all this to show, yes, everything is crashing. And that's why people aren't getting ahead. So I'm guessing you believe that, but I love your thoughts and your take just on this concept in general.
Absolutely. No, if something isn't beating Bitcoin, and this is what I did in my Treasury company study, basically what I showed is that over any meaningful time frame, the miners, which a lot of them have tried to beat Treasury companies, they don't compete Bitcoin. So unless you beat Bitcoin, I'm not interested as an asset holder. Why would I own it? Yeah. Because it is my benchmark. It's my hurdle rate. And probably the most articulate way I can describe this. Why do I own Bitcoin? There's a lot of reasons, but for me, it's a savings vehicle. And what am I saving for? What am I, as an Australian millennial man, what am I saving for? It's a house. And as anybody listening to this has probably heard, we have a monster of all housing bubbles here. So when I look at the housing market, that's my inflation rate. That is the number that I'm trying to beat. That is actually what I'm saving for, not because I think property is a good investment, but because, like a lot of us, or most of us, I would love to have a place for my family to live, right? I'd love to have my house. And for context, I think a lot of people in the US don't quite understand the scale of our bubble. Sydney is the second most expensive housing market next to Hong Kong. The median house price to median income is 15x. So, on equivalent terms, a single bedroom apartment in a shitty part of Sydney will cost you about 800,000 Aussie, which is like 560 or 650,000 US, something in that ballpark. So that's for a single bedroom apartment with probably not even a car spot. So it's a real problem. It's a mess. It's way more expensive than the most expensive areas of San Francisco and all that. More expensive than New York. So it's a crazy, crazy housing market. And most people my age are looking at going, I'm just giving up. I can never buy it. Why do I care? Why do I bother? Right? And they go out and they just spend their money on holidays, which I get it. Fair enough. The housing market, I haven't checked this for a little while, but I've got a chart on my site. If I look at the Australian housing market since 2020, because I think for a lot of people, 2020 is our benchmark. That's when the big print happened and they spit out all this money and inflation came rampant. So priced in 2020 dollars, the Australian housing market is up like 65% on average. In Aussie dollars. It is down 89 or 95. I think it's actually more than that, 95% in Bitcoin terms. So the Bitcoin that I held in 2020, I can now buy 20 times more house with that Bitcoin. So suddenly, I'm not too concerned about the price of the housing market because it is moving lower and lower and lower in the asset that I benchmark to. So my ability to buy a house has dramatically improved. And in fact, it would be impossible. I'm still not there yet. That's kind of how crazy this market actually is. It would be impossible. I don't understand how anybody my age has even a sliver of hope. And then what's worse, we were talking about leverage before, the amount of people that I know who are levering themselves to the gills, right? Our government's just brought out a 5% down. So people are going 20x long the bulletproof Australian housing market at a time when interest rates are drifting higher. There's all sorts of reasons why this is the worst possible time to be going max long this particular asset class. And yet this is what people feel the most safe on. It is the bulletproof market. Now, the government will kick the can. That's one thing that the housing market does have, is that the government will do everything in their power to keep the Ponzi scheme going. But every Ponzi scheme comes to an end at some point. So I'm not really predicting the end of the Australian housing market. All I'm saying is it doesn't really matter to me because I denominate in an asset that is kicking the housing market's ass. And that's a bloody hard thing to do.
Absolutely incredible. That's an amazing story just to amplify and magnify what's going on. And like you said, it really
it's solving a real world problem for me. So Bitcoin, say what's Bitcoin used for? It's like, I don't know, maybe fixing the number one problem in Australia.
Jeez. It's incredible. And it's a great segue to, price and talking as we start to land the plane here. And, what you're seeing this cycle, and what you're seeing, like, I guess even the 10-year gold rush, as Michael Saylor calls it, right? So kind of like the short-term and then long-term horizon, and even beyond that. And so the segue to this, I think, is, like you said, saving in this asset that's really just destroying everything else. And, there was, it was, can I get to 10 Bitcoin or 100 Bitcoin years ago? And then it was, American HODL's 6.15 Bitcoin is the meme for those, if on Twitter. And now it's, get to 1 Bitcoin, and now it's probably get to 0.1 Bitcoin or 0.01 Bitcoin. There's a lot of social media surrounding that, but again, we're human. So that's what gets people to actually watch a lot of the videos. That's why we see so much of it surrounding those topics. But in reality, what should people be aiming for? And the average guy, the average gal right now, a normal investor, just dollar cost averaging, confused by price, confused by maybe now half of what we're talking about here today. We're doing our best to bring it down to a 4th grade reading level, like most of us read at, us 80 IQ plebs. But what should the average person be really aiming for and stacking for as they go forward? Can they, or will they be able to retire, like you said, a millennial or a Gen Z, 10 years, 20 years, or even someone, we have a lot of people that are 40s, 50s, 60s watching the show. Will they be able to retire in 10 years? So I'd love for you to kind of unpack what you're seeing, what some of those goals should be, and we'll kind of flow from there.
There's 21 million points in the world, and your job is to store your money in, store your wealth and your time, and acquire as many of those points as you can. You're not trying to buy it to, put yourself in a box and stress over getting as many as you can. It is just a fantastic savings vehicle. That's it. That's all it is. And look, I've spent a lot of time, I spend a lot of time with deep, dark data and trading models and, algorithmic stuff and all that. You can spend a fortune and countless hours trying to design a model that might get you 5 or 6% more than just daily DCA. Honestly, daily DCA is one of the hardest strategies to beat in Bitcoin. It is so impossible, right? And at best, some of the best trading algorithms, you're getting up like 5, 6%. And even then you need to put leverage on to really juice those returns. Wow. The vast majority of people would benefit from literally just daily DCA. That's actually what we do with our company. Because I spend my whole time analyzing the Bitcoin market. I will, thus far this cycle, I think the on-chain data has been quite effective at spotting really good buying opportunities, points in time where the narrative is it's all over, and I'm basically looking at going, it could be, probably not. Actually, probably a good time to jump in. So far, it's actually been very effective at spotting those very timely, if you were to light it up on the chart, be like, wow, you managed to buy there. Even if you do that, right, you save up all your DCA and you time it perfectly, you might beat your daily DCA by 5, 6%. Well done. That's still good, but the vast majority of people would benefit from just consistency. Consistency is so much more important because you're getting the full average price of the market. So for us as a business, because I've got 10,000 other things to deal with, we actually just have a daily DCA. It just ticks away in the background. When we get those big events where it's okay, this looks like a bottom, we will lump sum a big chunk as well. So we've kind of got that that's our general strategy, but we are buying literally every single day because it is the best way to just get the perfect average return. And the average return for Bitcoin is tremendous. It's better than pretty much anything else you can find. And there will be things that come and go. There'll be treasury companies that moon and doom. They will come and go, but Bitcoin is that one constant that's just going to keep doing very well. And in a bear market, which will come eventually, that is where you actually want to leave your daily DCA on the most, because you are going to be buying more coin the lower that the price goes. Mm-hmm. What actually happens, the reason why daily DCA is so hard to beat is when you're stacking away, right? You're in a consolidation range or a bear market, you're stacking away, then the price usually just rips. And the Bitcoin market only goes up very, very rarely. Most of the time, Bitcoin goes sideways. 40% of the time on a daily basis, it literally doesn't go plus or minus 1% in either direction. That's actually the statistics. 30% of the time it goes up 1% or more. 30% of the time it goes down 1% or more. On a quarterly basis, most quarters, it goes nowhere. But then you get the occasional quarter where it's plus 100% or plus 70% or plus 50%. And if you are not there for that plus 100%, you miss it. If I've taken the last 3 market cycles, so 2017, 2021, and this cycle, and I removed the 10 best days, just made them a 0, and I removed the 10 worst days. And this is pretending that you're like the perfect trader. You only buy the day before it rips, or you sell right before the biggest red, and then you buy back in. If you are that impossibly ridiculous trader, if you miss the 10 best days, you are either flat on the whole cycle or you're down. So you actually lose money if you're not there for those 10 days. If you miss the 10 worst days, which is what a lot of people are trying to do when they say, I'm going to sell here and buy back later. When you miss the 10 worst days, your return goes from like plus 500% to plus 600 or plus 800%. Yeah, sure. You did better. You're plus 800, but you might sacrifice the plus 500 and get a 0 by just trying to time the market. Just be in it all the time. Just be in it all the time. That is literally the secret sauce of Bitcoin. Hodling is simple. It is not easy. At the end of the day, that's why I write the newsletter. A lot of people are like, oh, but do you write for traders? No. Actually, my target audience is hodlers, people who are just buy and hold. But the reason why is they all have 95% of their wealth in this thing, and they want to watch the basket very carefully, because when you understand what the basket is doing, it makes it so much easier to hodl, because you're like, I don't care that it's up. I don't care that it's down. I thought about it going down and up, both directions, long before it happens. So when it happens, you're not surprised. I don't want any of my subscribers ever to feel like a deer in the headlights, where the market suddenly rips to the upside and they go, oh shit, is this the top? And I also don't want them to sell off and then be like, oh my God, is it all over? Is it a bear market? I want to be like, yeah, I was expecting that. Now I know what to do. I'm going to step into the market, or I'm going to step back, or whatever it is. So that's really the most important thing. If you are new to Bitcoin, just buy and hold, daily DCA. It is such an unbeatable strategy. Just be there for those 10 days. Don't worry about the 10 bad days. They get more than consumed by those 10 good days. But you've got to remember, 10 days out of a 4-year cycle, you don't know when they're going to happen, but they're not common. They just sometimes just explode out of nowhere. And if you're buying after that day, because you're like, oh, I was going to buy, I didn't realize it was going to go up, you've missed it. Now you're going to get a 0.
Yeah. It's such a great point. You don't play roulette, right? You got whatever that is, 1,000 days or whatever that is, the 4-year cycle, and you got 10 days. You got to hit whack the mole somehow. Good luck. You're playing roulette. You're better off doing that. All right, I want to walk through. So again, the average person watching this, is like, okay, where's going long term? So I want to back this 3-parter from like long term. I have a long-term question for you here, and then like the 10-year gold rush, that segment, and then what are we looking at this next year, like this bull cycle? What does it look like to you? So the first question is, what's the total addressable market of Bitcoin? Like where is this thing going? Because I know there's still a lot of people that are, like you said, the newsletter is there to deepen conviction of hodlers, but there's also a lot of people who are just learning this asset class. So I'd love for you to unpack your thought for a minute on, are you more of a Jack Mallers type of guy? Hey, it's 1/2 of every transaction that's Bitcoin. It's 450 trillion is the addressable market. Or are you maybe more of a Jeff Booth guy who's, hey, it's 900 trillion. It's going to account for all assets on earth, or maybe, some variation in there. So I'd love for you to kind of unpack where things can go and where they will go on a long enough time horizon.
I am some magnitude less bullish than those two. Not because I don't think it can't happen, but I just think it's Bitcoin being 1/2 of every trade or all total wealth, I think is just such a nonsensical. It's the asteroid hitting the Earth. Am I going to factor that into my model? No. The way I like to look at things, and it might have been Preston Pish actually in Seoul. He was basically saying, and as an engineer myself, I fully understand this. He goes, basically the way that you design things is you put the most conservative estimates you can. You bring everything down, and then you say, if it works under these super conservative levels and I'm happy with it, then everything above that is just bonus. That's just gravy. So for me, it's very simple. Bitcoin is just better than gold. It's just exponentially better than gold. And if you want to have an exercise to do this, get a $5,000 or whatever. I think it's 5,000 Aussie, $3,500 worth of silver coins. Get $3,500 worth of silver coins, put them on your desk. It's a heavy, chunky piece of metal, right? It's a big thing. Then you get a single gold coin, right? It's this big. And then you put $1 billion worth of Bitcoin on your table. Where is it? Oh, and by the way, I can zip it from my vault to your vault to that guy's vault. You can move it around the internet. It's just better. It's better gold. So for me, what is the initial price target for Bitcoin? Let's just get to gold parity first. So that's not in dollars. That's 10.8 kilograms of gold per Bitcoin, which right now is like $1.1, $1.2 million. So that's my initial price target. Let's not worry about being 1/2 of every trade. Let's not worry about being 500 trillion bazillion dollars. Let's just get to 20 trillion first. Let's start with 20 trillion. Once we get to gold's market cap, because this is the other thing. Once you get to 10% of gold's market where we are now, people are already eyeballing and saying, well, if you can get to 10, can you get to 20? And if you can get to 20, 50's next. And once you're 50, let's fucking go, right? Let's go to 1. So like that move, that is enough. And that's my conservative engineering design. Do I believe that we can get to gold's market cap? Yes, I do. If we go above that, I'm happy as Larry. How could you possibly be mad with that? I'm not even going to pretend to estimate what the world looks like that far ahead. Who knows? Complete variable. What I'm very confident of is that fiat is not going anywhere anytime soon, because 97% of people, we keep coming back to this number, 97% of people and 100% of governments do not want fiat to go anywhere. And you know this because look at the hyperinflation that can happen elsewhere in the world and how much pain people will take, and they still won't buy Bitcoin. Yes, it saves some. Saves, I would say, wager, about 3% of people it saves. The other 97%, they don't want to change. Change is way scarier. So they will just take the beatings until it gets worse and worse and worse. So yes, I think it's very exciting to say that Bitcoin will be 1/2 of every trade. It's very exciting to say it'll be more than all global wealth. I'm quite happy with just getting to gold's market cap. Let's start there.
So where
people call me a bear, and that's like a 10x.
Hey, you're an engineer. I mean, you can't, gotta.
I'm happy with the 10x. Let's start there, because once you get to a 10x, once you're at 100% of gold, with like, what about 200? What about 500? So that's where that comes from.
Well, and engineers have to operate in the real world, right? So let's operate in this real world. Let's take what we got and go from there. So where are you in the next? So even the 10 years, we'll just say, how about we just say this next year or two? Like, what is this bull, market, again, quote unquote, but what does this cycle look like to you playing out here in the coming months, coming quarters?
Yep. So as I mentioned, it looks like we're entering the euphoria zone. People are starting to lever up. We're no longer in a spot-driven market. We're more in a leverage-driven market, more futures, more options. Now, look, Saylor has this line, all your models will be destroyed. I would love to see my models be destroyed, because right now my models tell me that about at 120K, 125, this is the next target. And we're at 108 or 107 at the time of recording. If we get to 120, 125, that is where, historically speaking, this is not a prediction. Nobody can predict the future. Least of all myself. If we get to 120 to 125, historically speaking, many levels that describe how in profit the average investor is will get to the point where they started seriously selling in the past. We hit that same level at 73K. We hit that same level at 100K in November and March, respectively, or reverse. We tagged that zone. What happened? People started selling. They sold so much that we went down 30% and we chopped around for 6 to 8 months. Yep. If we get to 120, that selling will start. Now, during the most euphoric phase of a bull, where, I don't know, people are taking lots of leverage, treasury companies are springing up like mushrooms and buying Bitcoin, suddenly Bitcoin is bulletproof. People keep buying and they buy and they buy and they buy. The market can run straight through that level. But there is a certain point in time where we will exhaust the capacity of the bulls. Now, that will be met or balanced by sell side coming from existing holders, because
if you're liking this interview, but you're just wondering, you know what, Brandon, this is amazing stuff. And I get you have these guests on and they're talking about how orange pilling the world is so great and how Bitcoin is going to take over the world. How in the world do I educate my family and friends? How do I get people to understand what most people just don't care about, quite honestly? Bitcoin trading cards is the way to do that. When you open up these cards, you see the foil cards, you see the chase, you see the glossy cards, young, old, boy, girl, man, woman, it doesn't matter. People love these cards. It's awesome because they're super valuable, by the way. Amazing little side note. However, it Trojan horses them into the most important thing of the day. It's not politics. It's not all the things that we fight about. It's changing the money, fix the world. Bitcoin trading cards is the best way that we have going in order to do that, no matter who you are. You're gonna love them. Playable Characters 10 for 10% off at checkout. Playable Characters 10 off at checkout. BTC-TC.com. You're going to absolutely love these things. Now back to the show.
As much as most of us believe that Bitcoin can probably go to gold's market cap, there's also some dude who wants to pay off his mortgage. And there's some dude who bought for $500 who can change his life. This is what's going to happen. So people are going to sell. Now, could the market keep ripping through these levels? Absolutely. The odds are, if we get to 120, 125 is where the selling is likely to start. 150, if we wind back the clock about 6 months, 150 was this level I'm about to describe it. At 170, because the reason why these models move, and I've got it in the corner of my eye here, this chart, the reason why these models move is that demand comes in. So it's a self-adjusting model. It's basically looking at how much capital is flowing into Bitcoin, because if capital is flowing in, then we can just keep raising the price. If it starts plateauing, it's basically telling us that we are rallying, but there's no more capital coming in. It's now just pure speculation, bubble type stuff. So as more capital comes in over time, this level is about 170 or thereabouts. Can we go above 170? Absolutely. But there's less than a 4% chance that we stay there, right? That's not zero, but there's less than a 4% chance. So my odds are 120, 125 is, I think we're going to get there. I think it's pretty likely. 150, 170, we're going to be seriously moving. But at that point in time, and again, all my models might be destroyed, but I'll be looking like a hawk at the amount of sell side that's going on from existing holders. The price suppression, as people would like to call it, which is literally people taking profit. So I'll be looking at the price suppression and also the amount of leverage building up. And I almost guarantee you that at the top, because there will be a top, we will see a huge amount of sell side from existing holders. We'll see a huge amount of leverage from people who are levering up. We'll see all of the telltale signs of a Bitcoin bull market top. And every commentator on Twitter will say this time is different. And it won't be different. It will most likely top out. Now, that may only be a 30, 40, 50% correction. It may be a 10% correction. I don't know. But I think the odds of us going from 120 to 170 to 200 to 500 to a million in the next 6 months is so close to zero that if it even remotely happens, I have to fade it. So it's, the odds are it's not going to happen. So I use two personas. Check the hodler would love that to happen, but check the analyst would be a negligent idiot to tell you that it's going to go to $1 million in the next 6 months. I'm purely engagement farming at that point in time, and I should not be trusted.
Amazing. and we've kind of danced around it a little bit over time, just this whole talk, but diminishing returns, just your thought at any point and just how that might look. And it could be just eventually what your mind might see. Or the other part is what drives most of it. Again, everyone wants to synthesize everything, all this down to like M2, like global liquidity. I guess, what are your thoughts on those things as we wrap here?
Yeah. So diminishing returns, I mean, of course we're going to have diminishing returns because, and I ran this study recently, take a table, take the $100,000 Bitcoin price and then the market cap, which is what, 2 trillion, take a $2 trillion market cap and then apply a CAGR for the next 10 years, which is a 10% and then 10% again, and then 10% again, then 10% again. Do it for 10%, 20%, 30, 40, 50. Once you get to like 50% CAGR, in the next 10 years, Bitcoin's worth more than all the money in the whole world forever. It's like quadrillions and quadrillions of dollars in 10 years. Wow. Stupidity. Makes no sense. Like remove 50% CAGR from your model. It is dumb. It literally doesn't make sense. We can have periods of time where it goes up 100% and then it will go down 30%, it will go up 50%. We can have all this stuff. But to sustain a CAGR of 50% for the next 10 years is it's literally nonsensical. The computer says no. So, it's just about reframing ourselves. The historic days of Bitcoin going up, thousands of percent in a year it's of course it's not going to happen again. We're a much bigger asset now. This is where people are getting confused. They think that Bitcoin is still in 2013. When they talk about price suppression, the Omega candles happened when nobody knew about Bitcoin. The Omega candles of today, if we go up 50% from 100 to 150, that's $1 trillion market cap change. $1 trillion, right? That $1 trillion change is like in the top, 10 or 20 companies in the world in terms of scale.
Yeah.
People have lost sense of how big Bitcoin is. Trillions of dollars. What is it? It's $1 for $1 a second for 37,400 years. That's $1 trillion. That's a long time.
Insane,
right? That's a very, very large number. But then simultaneously, to your second point on the concept of M2, yes, there is a directional correlation with M2. I think a lot of people, like to share the chart of like M2 shifted by 12 months or some shit. Look, the problem with that is that they're taking monthly or sometimes quarterly government M2 data, converting it into US dollars. What they're actually measuring is like a constant multiplied by DXY or the dollar exchange. So they're more measuring the weakness of the dollar than anything else. It all depends. If you suddenly put M2 in, priced in Swiss francs or Australian dollars or, Japanese yen, suddenly that chart changes. Like, this is a very one-dimensional perspective, US dollar-centric view. So yes, there is a directional correlation with money supply, debt, deficits. Nothing stops this train. All very, very true. Why I own Bitcoin? Why does housing go up? Because they keep printing goddamn money. So what do? I own Bitcoin because it's going to run faster than the house when they print the money. So it's all the same trade, as you said. Yeah. But don't get too caught up on the engagement farming tweets that show like, oh, we're going to go up in the next six hours because M2 is going. It's like, no, it's just not how it works.
Incredible stuff, brother. Last thoughts. Where can people find you? What are you working on? Where would you like to send people?
Yes, so we've got a couple of things over at Check on Chain. The main one is, so we've got a charting suite, which, as I said, is totally free. We're doing a revamp in the background. That'll be hopefully live in the next couple of months. We've got a newsletter over at a Substack, checkonchain.com. So, I mean, look, what we basically do is twice a week. And people tell me all the time, like, that's just enough. They get through like 85% of it. Like, I feel like I've learned something every week. We do written and video. So every post is, 2,500 words and then about a half-hour video. It's basically me sharing my worked example of how I come to all my conclusions. We do market updates, masterclasses to understand how to actually interpret these metrics, but also just like explaining things like, hey, Bitcoin's really big. It's going to take a lot of capital to move it, and showing people in numbers a lot of the stuff we've talked about today, just demonstrating and showing the worked example of how I've come to these views. So the idea is to help people think through complex problems. And a lot of people have come to me and said, I'm sorry, but you destroyed Twitter for me because I now see through all the bullshit, and they go, it's so noisy. So there's a lot of people who are like, this is my world. I look, I'm like, oh God, Twitter's just tough because it's full of people who are engagement farming, not actually giving people an honest assessment of what's going on. And that's why people call me a bear. I'm not a bear. I'm just, and as you said, I'm an engineer. I'm realistic. I'm trying to keep things on the ground because that's where we live. And too many people have gone through 5 or 6 cycles of living in the clouds, and it never quite played out to the way that they thought. Now they can be like, now I know why it didn't play out that way, because I was living in the clouds.
I feel like that the Bitcoiners, we have to balance that hopium, balance the idealism with pragmatism, you know, and because you, like you said, you got to be the crazy one. You have to push the boundary and be revolutionary and be idealistic and say, hey, this is where we're going. But at the same time, balancing it with, hey, this is the real world. We're in this world, though. I know we're pushing here, but we have to balance with this. So
check the hodler is on that level, and check the analyst is always pulling on his leash saying, not yet. Come on, get back over here. It's not time yet.
We will link to all James' work. It's phenomenal work. Thank you so much, Mr. James Checkmate, Check on Chain, for being a playable character in a sea of non-playable characters. Thank you, sir.
Good on you, man. Thanks a lot.
If you can't get enough of these interviews and you want to deepen your education on sound money, wealth building, and freedom, you're not going to want to miss this playlist here. Happy binging. Check it out now. We'll see you inside.